Following on from 9A, in 9B you actually had to do a budget of a cash flow statement, and that covered the topics of financial reports as well as budgeting. So what you were given was the old balance sheet at the 30th of June, which is the actual results here. And you're also given some budgeted or expected figures here. You were also given the budgeted income statement, some additional info, and lastly, you're also given a GST clearing ledger. So what you need to do this question is remember the three sections of a cash flow statement. The first one is operating activities from providing goods and services on a day-to-day basis. The cash inflows will be from selling goods and services, and the cash outflows will be from paying employees and suppliers to keep your business running each and every day. In the investing section, we have cash flows from the sale or purchase of non-current assets. So the inflows will be when I sell a non-current asset, and the outflows will be when I buy them. Financing activities will be cash flows that change the firm's financial structure. So capital contributions will be an inflow, and the opposite of that is drawings, which will be an outflow. And borrowing money from banks will be an inflow, and paying it back will be an outflow. So what you want to remember is the cash balance is like a big tank with three tubs in, called inflows, or three pipes in. One of those is operating, the day-to-day trading. One is from investing, selling non-current assets. And one is from borrowing from either banks or the owner. And on the other side, money leaves the business by either being spent on running the business on a daily basis, which is operating, buying non-current assets, which is investing, or paying back debts, or the owner, which is financing. So what we're going to do, the best way to do this is to do it section by section. So we're going to start with the cash flows from operating, and that way we don't need to sort of continually rub stuff out and wonder how much space to leave. So what we'll do is look for inflows from the day-to-day trading of goods and services. So what I'm looking for is cash sales, money from debtors, or receiving GST. So the first thing I'm told is sales are 202,000, but I'm also told here all sales are on credit. So there actually are no cash sales, and if there's no cash sales, there's no GST received. So what I will do is figure out what I need to go back and remember is in 9A, I had to figure out how much cash here was received from debtors. So I figured out that was 209,550. So I'm going to put that in as my amount as receipts from debtors. That's all the inflows there could be in operating. So what I'll do now is look for the outflows. So looking through my budgeted income statement, I can see the wages are 27,000. Advertising is 9,300. The interest expense is 1,100. And other expenses doesn't actually say what they are, but I'm going to assume that they're all cash, which is a little bit unfair. How are you supposed to know that? But I'm going to put that all in as outflows of 14,100. So you can see I've left some of the other expenses like depreciation and discounts because whilst they are expenses, they're not cash outflows. What I've got now is, well, how much stock did I buy? I can't have sold stock without buying it, and what I need to do to get that is to go to 9A. In 9A, we recreated stock control, and specifically, we figured out here how much cash did we spend on buying stock. So I got 123,250, so that's the number I'm going to put in there. If you got a different number, just make sure you carry forward the number you got in 9A. Then I'm going to need to figure out, well, were there any other sort of outflows from operating from the old balance sheet? So what I can see here is it looks like during July, I'm expecting to prepay advertising of 3,000. So I better put that in. I can also see that in the actual balance sheet at the end of June, there are accrued wages of 2,500. But at the end of July, I'm expecting that to go down to 1,500. So what that must mean is I'm expecting to pay back 1,000 of that, so I better put that in as accrued wages. We then have GST paid, which we always leave to the end because it does cover multiple sections. It covers operating and potentially investing. So I'm going to leave that till the end. I'm going to put my heading in, net cash flows from operating, but again, I'm also going to leave that total until the end. What I'll do now is move on to the cash flows from investing. I'm looking for money in from selling non-current assets and money out from buying them. So what I was given was profit on disposal. Now that is actually not a cash item, so that won't go in. Also been given depreciation from using the non-current assets. That's an expense. It's not a cash flow though, so that won't go in either. What I'm told here is equipment costing 25,000 with a carrying value of 9,800 will be sold. I'm not told how much. I'm also told new equipment will be purchased, but again, I'm not told how much. So to answer this, I'm going to need to go back to 9A, and what I got in the disposal of equipment ledger was this number here. I had to figure out how much I got from selling the equipment. So I got 13,500. So I'm going to put that in as my disposal of equipment amount. Secondly, I need to figure out, well, how much, it says here I bought new equipment. It says will be purchased for cash, but I don't know how much. So what I'm going to do is sort of figure that out in reverse. At the beginning of this budgeted period, I had $37,000 of equipment. I'm going to get rid of 25,000. That'll leave me with 12, and yet at the end of the month I'm told there's going to be 42,000. So I must have bought more, and the amount I bought must be the difference between those two numbers, which is 30,000. So what I'll do is I'll put that in as the purchase of equipment as a cash outflow. I can now total up the net cash flows from investing, and I'll move on to the cash flows from financing. So I'm looking for money in from loans or the owner, and it says here there's no capital contributions by the owner. I can't find any mention of a loan, so I'll leave it. On the other side, I'm looking for loan repayments and also drawings. Now, first of all, it says drawings will be 32,000 during July. That's what it's budgeted to be. However, it also says in the additional info that $3,000 of that will be stock. So in the cash flow statement, I better only put 29,000. How much of the loan will be repaid? So I can see that I'm expecting to pay in the next 12 months $37.50, but do I pay it during July? Well, the additional info says down here I will. The loan repayment is just once a year on the 14th of July, and I can see what's going to happen is it's actually going to decrease the non-current part down another $3,750. So presumably that means I'm paying back that loan during July. What I've got now is the net cash flows from financing, and what I can do now is move on to GST paid. I don't know what that was. I left that blank up here. So what we normally do is we just wait until the end and try and figure out, well, what did and didn't have GST. So for example, advertising did. Interest wouldn't have. Other expenses, I don't know what they are, so I can't really answer that. Advertising prepaid would have as well. Did the equipment? The question didn't say. So my problem is I've got a lot of numbers that I don't know the answer for, so how am I going to figure out which ones have GST? There's actually a cheat, and the cheat is you're given the GST clearing account, and what I've got here is an amount paid. GST is a liability, so when it shows up as a debit, that means I've paid it. I've paid $17,865. Now, is that GST paid this month, or is it a GST settlement? Well, what it says up here in the additional info is no payments or refunds from the tax office are expected. So this amount here can't be a GST settlement. So that's just got to be the GST I've paid on the transactions this month. So I'm going to put that in as an outflow. And now I've got that, I can put in my net cash flows from operating. Once we've got that, it's pretty simple to finish. I just add up the three sections, and that'll give me the net increase or decrease in cash. I can get the cash at the start of the period. Now to get that, I'm going to go and find that in the balance sheet. So the balance sheet for this period says at the beginning it will be 27,320. So I'll put that in, and then that'll leave me with cash at the end of the period. How I get that number is I add these two numbers together. There was also a cheating way, or a shortcut, was by looking at there's expected to be an overdraft here of 8,995, and that's what I got. So I've kind of got a little shortcut or a checking mechanism there to help me check whether I've got everything else correct. Looking at the marks, so a lot of marks, the biggest question on the paper in terms of marks, this one. One mark for the receipts from debtors and the cash purchases of stock together. They both came from 9A, so there's only one mark for the two. One mark for wages and accrued wages. Now I've split them. If you actually just want to combine them in one entry, that's acceptable as well. There's one mark for advertising and prepaid advertising paid. And again, I've split them, but if you do want to combine them into one entry, that's acceptable as well. We have the interest, the other expenses, and the GST paid. That'll get you another mark. The fifth mark was for the disposal of equipment. The sixth mark was for buying the new equipment. The seventh mark was for the drawings. The eighth mark was for the loan repayments. And there was a ninth mark for finishing the report with those three numbers at the end. Looking at the results, 51% of the state got 0, which on a question that's out of 9 is really disappointing. So a lot of the state had so much trouble with this question, so expect a difficult budgeting question on the next exam. The average was only 2.2 out of 9. Looking at the top end, only 4% of the state could get this right. First of all, the examiners made a comment, even if you got some questions wrong in 9A, some numbers, as long as you carry forward those wrong numbers, you're going to be fine. Other errors included putting in credit sales. That's not a cash item, so we should have put in receipts from debtors. Also putting in an alien entry, which refers to an item that just doesn't belong. So in this case, discounts, stock write-downs, sales returns, and so on, they're just not cash items, so they shouldn't have gone in. Also missing the prepaid advertising from the previous balance sheet. We can see that we've prepaid for the next one. And also a lot of students prepared an income statement instead of a cash flow statement.